Hey guys, it's Will, and we are in the golden age of AI. And the most profitable investments that you can make this week are going to be covered in this top 5 AI stock video. And we're going to go into the analysis of the news, the financials, and what we could expect profit wise in the upcoming week. Let's take a look. So, a couple things to consider. When we're looking at the comments, guys, thanks so much. We just passed 20,000 subscribers. Do consider subscribing if you're just tuning in. And if you missed our class on virtual stock trading, it's the first link in the description. Let's jump into it. So, number one of our AI list, we're going to go back from the top to the bottom based on market cap and also volatility. So, the least volatile but highest profit long-term investments and short-term swing trades are going to be seen in Nvidia. Nvidia is over here at this top of $145. They work in data centers, AI, the infrastructure that's going into much of what is building the future for many companies that are starting today. So when it comes to Nvidia, a couple things to consider. They're in a growing market. And if we take a look at their stock from a financial perspective, they're one of the biggest, if not the biggest company in the world at 3.5 trillion. You see, one thing about their financials that's been really interesting. They have a market cap up there, PE ratios at 46. So they are on the overextended side as of now. If you look at their consistent gains in quarterly revenues increasing quarter over quarter, and annual revenues have been drastically increasing year over year, with their net income also slightly dipping here. So if you take a look at annual, let's take a look at their cash balance sheet. They keep their liabilities low, but their liabilities are still holding and growing as well. They're up 41%. But overall, their net income is increasing. $72 billion they netted, and their revenue is up to $130 billion in 2025. So as far as AI stocks, they're definitely a no-brainer for the long term. There's a lot of hype articles about buy it right now before it's too late. One of the best times to buy was down here, obviously, in this big dip, and we could see some market corrections in the near term. So when it comes to Nvidia's recent moves, yes, they're doing robotics. Yes, they're even going into quantum computing, which we'll jump into a little bit. But they're also here at this previous high. Now, will they make all-time highs? It would make a lot of sense to see them push up even further. But when we're looking at this margin, yet you do have to look at this recent surge and then factor in, we can't forget about the news. Just this past week, we had a new bombing on Iran. We got new wars kicking off, which could hit the market negatively over the next few days, 2 weeks. So just watch for a potential correction down. We see it above that 200-day moving average, that 200-day moving average down around $120. So before we make higher highs, it's possible we see a sell down even as much as 10%. And I would actually expect that as it's made this full recovery. So we'll be watching it closely and see for how that looks in the next few days. Number 4 is going to be AMD stock. AMD is also specialized in data centers, in the infrastructure for AI, and they have also had financials that have looked very favorable. If we look at AMD, you could take a look at their financials. They've had increased revenue, 35% year over year. Their net income is up 476% year over year. And their net profit margins are up 320%. So looking at what's happening with AMD, they have the data centers, they have the gaming, and they're kind of seconds in the AI infrastructure to Nvidia. But they are part of that recent UAE contract, that deal. They're one of the companies that's supplying, they could even be put into space tech as they supply the microchips and semiconductors for Starlink. So Starlink is a very fast growing company that's part of SpaceX, and the main semiconductors that are being put into AMD are, or being put into the Starlink satellites, are going to be AMD. So if you look at Starlink and you look at AMD, you can even see the AMD chips are powering the newest Starlink satellites. It's really important to note this, as this could be a huge catalyst for them in the near term. Now, as their financials have looked quite good, and we see them push up into these doubling of revenues and still keeping their net income, it's positive there. But when you look at the balance sheet, their liabilities have not increased really at all year over year. However, their assets have. So they've kept their liabilities down even more. The thing about AMD is that they've had this increase of revenue and increase of net income over the last year. But when we look at their pattern here, I think there's more upside potential, because these are the earnings they've had. They've had earnings of doublings of revenue. However, they continue to sell down. This is really since mid 2024 into all the way into April, and for the last 3 months they've recovered, and we see them get back into this dollar or $127 range. The next levels we're looking for are going to be up into those previous levels, up here around $200 a share. That would be a 78% increase. So I think there's much more upside potential for AMD stock. And when we look at them on the near term, here's how it looks here. They've been in this trend since April, pushing up above previous resistance and finding support in higher lows and higher highs. And now they just recently got a little rejected up here, but now it's interesting. They're looking more bullish. And the reason why I say that, this previous support and resistance, this rising support or resistance, is now acting as a support for AMD. So it's possible that we do see them find even a hyper bullish trend continuing, validating this previous resistance as a support and pushing up further into these levels. The next level for AMD stock is up here in this range. You got a previous support and a previous resistance here, right here, that they are crossing above the 200-day moving average. And we're going to watch for what would be from here. Let's see what that would be. It looks like a margin for profit from here of about 11%. So that's a 10% trade on AMD, a 20% trade over on AMDL. And we've been trading them pretty consistently over the last few weeks. In fact, over on AMDL, if we can find the ticker symbol here, we just made a trade a couple days ago. We look at their chart here, where we are able to catch this trend here that was about a 20% swing into that $6.80 range from $5 on AMDL. So they're the main underdog. They have the data center expansion, they have increasing revenues, and they've had huge sell-offs over the last 6 months to a year, where they've consistently sold down. And now we're looking for that big recovery into those previous highs. So again, we're looking for about a 70% margin for profit in total, or an 80% margin for AMD on a longer term swing trade. And we'll be monitoring that short-term breakout to see if it can make that 10% swing. But AMD, you got Starlink, you got data centers, you got the increase of their value of their company as they recently purchased. It was AMD and Bream. So Bream is a software company that specializes in specifically the optimization of large language models. And when we were looking at Bream from a perspective here, let's see if we could pull it up. Bream AI Inference. They released this this model, or this software, that runs LLMs way faster than SGLang. See, we're running on SGLang. On the left side here, you can see this is running the Bream here. And then on the right side is SGLang. And you can see the time at which the model was able to produce the results with Bream was way faster for their large language model. So why is that important? Well, if we look at the types of benchmarks that they're hitting higher and better. They are also finding that the amount of time with them going through VLLM versus Bream was way faster. And so what does that mean? It means that when they're building software, they're able to create models that are very fast, much more responsive due to the software that they've developed. And so just recently, we saw AMD acquire this company, which puts them at an advantage. And also, just recently, I was barbecuing outside. I saw a huge Starlink constellation flying over the top. I live in Northern California. What does that mean? It means real world usage, real world market growth, and that's going to be good for AMD stock. So that's why we have them there at number 4. Number 3 is going to be Super Microcomputer. So SMCI, it's had some volatility, and we see that they're down from their all-time high. They're at $122. They sold down not just because they were in the rest of the bear market there in early 2024, but they also sold down because they had some false news. There was a bunch of articles that said that they were not having good financials or that they weren't accurate, and there was a bunch of articles that said that were fake articles that said they were no longer working with Nvidia. But nevertheless, Super Microcomputer builds the housing for GPUs inside of data centers. So the infrastructure to hold the computers and everything else for data centers. And not only are they working with Nvidia, they also have a huge partnership with Elon's company, xAI. So xAI is working on building their own GPUs. They're also working on having their own data centers. And what is the housing that's going into building those xAI data centers? Yes, they're using Nvidia and some AMD in their own GPUs as well, but the company that Elon's decided to go with there is Super Microcomputer for the housing inside of those data centers. So most companies, you'll notice this common recurring theme where they're part of data centers or they're related to AI in the intelligence fields with connections. And the connections that we see with Starlink, Nvidia is very well connected, providing for Apple and Google and Microsoft and what have you. But you also have this Tesla or xAI connection with Super Microcomputer. They just crossed above that 200-day moving average. There was a previous resistance here, right here, that they just kind of broke above where they were consolidating. As they've crossed above, we're going to see if they can hold this $43 price point, because the next trade I'd look for with Super Microcomputer would be up into the $65 range. So about a 48% margin for profit to there. To previous highs, we're looking at about 170% increase. But yeah, this is a nice trade, something I'll be watching closely. Their financials, if we take a look at SMCI, a couple things to note about the financials. Their market cap's at 27 billion. And so they're doing fairly good. You look at the 45% gain. Their PE ratio is still at 25. So usually close to 20, 25. That's actually a really good PE ratio, indicating some more growth. So when it comes to their financials, what we've seen recently is annual revenues really increasing year over year. Their net income was above $1 billion that they netted, and their revenue was about 15 billion. So with revenues in the $15 billion range, they're building that balance sheets annually to be up there at about 9.8 billion in assets. So the liabilities are up for sure, but you see the total assets increasing even more, and the cash and short-term investments up nearly 300% there annually. And then quarterly, we do see consistent revenues, slightly stagnant into end of 2024, but there was a lot of orders that were placed towards the end of 2024 from big tech in order to build out more data centers. So they're one of the main players there, and I would expect some more revenue with their data center infrastructure, and that's why I see them as a top AI company to be watching. as AI continues to grow. So from their chart perspective, we'll look for that break above to here. And when that happens, we start to see it validate and continue. What we'll most likely look for, maybe a stop on a shorter term trade around 43, somewhere in here, and look for a gain up to 65. That 40 to $50% margin for profit could be huge for a super microcomputer. And on top of that, why we're looking at them is because they're helping to facilitate the actual building of data centers, and data centers are a very fast growing market. So that's why we're looking at supermicro computer. Now, how we're going to trade it, definitely we'll watch it market open. The long term looks pretty good. The short term could have even greater potential swings in this short amount of time that we'll be looking for. And again, if you guys ever want to join us in the live sessions, I trade there live. It's in the second link in the description. You can learn the fundamental analysis, technical analysis, surround yourself with other investors and traders, even get some books that I have written, even pre-ChatGPT. So there should be valuable for you to learn how to implement a plan and how to trade on the nearer term, and join our daily live sessions every morning at market open. So again, it's that second link below, and I would encourage you guys to simply take a look. When it comes to AMD has the data center building, and Nvidia has the data center building. These are the companies that are standing to benefit from that. So super microcomputer, we got there at number 3. Number 2, this is a company that's in quantum computing, and this company is called IonQ. IonQ is a stock we've traded pretty consistently. And one swing I'm looking for is this 20% swing up into this $48 range. There's been this 3 stages to a reversal. They're a quantum computing company that has found traction. They just recently were pushing back above this 200-day moving average. And what I was looking for was this continuation of this overall trend that we've seen since April, and potentially making a recovery into these levels. It's about a 15 to 25% margin for profit, and we most likely would trade IONX. As you can see, we entered a trade there a little while ago, and IONX goes up 2% or down 2% when IonQ fluctuates 1%. So that's going to be a trade we'll watch. And part of the market with IonQ, I was able to speak to some executives at their company when I went to CES, and they have some really good contracts. Air Force Research Laboratory. They have Microsoft Azure. They have Amazon Bracket, and you can see Airbus, GE, all these contracts. They're partnered with Nvidia, and you got some big potential with this company because of how they're using their quantum computers. They're using trapped ion, and they're building some protein optimization. So for example, how do peptide proteins bind when there's millions of different potential proteins that could bind to another protein, the peptides? It's hard to find that through searching for that. So what do? You have to run millions and millions of potential options, probably billions, and then be able to run a quantum computer that can do that compute much faster with less energy usage. That's where quantum comes in. And you got carbon sequestration, so how to pull CO2 out of the air in a changing climate. There's better battery materials. There's some really good examples of where they took 20 years worth of research and was able to get it down to just 8 options. And then one of those options, their scientists were able to improve the lithium-ion battery by 70%. So those are the types of things we watch. They've been around for a while. They've had some good announcements as of recently. If we were looking at the company's newsroom, they've been building out more drug development. And they just came out with an article recently where they have some new partnerships that are related to building out their network of quantum computers. some more software as well, their networking roadmap. So being able to move quantum computer to save the actual information that they run through these quantum computers. The data side is where the software has to come in. And when you're working with trapped electrons or ions, and the frequency at which they move is just insane frequency that would be very hard to calculate when you get down to the electrons and the ions. And so they're able to find ways to actually measure and have fault tolerant quantum systems. Then that's what you call error correction. And as they work towards error correction, it means they can fine tune their quantum computers. And I see them as the future of AI in a way, because quantum allows for you to compute way more than what it would take with GPUs. So QPUs are something they're selling, they're working with other companies, and currently you can tap into the cloud and use this quantum computer supposedly through Amazon and Microsoft. So we haven't had a chance to do that, but this is one we'll be watching more. And you can see they have a quantum cloud made for developers. And this company has had some financials that have been interesting. IonQ hasn't had good financials. If you look at their market cap, it's at 10 billion. But when we look at their Google overview of the finances, their net income is quite negative, 32 million, and the revenue is down just a tad. So when we look at the growth of them financially, we haven't seen it. It's been actually greater net income. They're seeing more revenue. The revenue is up 95% year over year. And their balance sheet, it's doing just fine. They have assets, but you do see that they aren't having any exponentially fast growth just yet, but it's one that I would watch. So a little bit lower market cap than the others, but definitely one that I would encourage you to simply take a look at if you're interested in how AI will be changing, not just from what's developed for the different use cases, but actual hardware behind how the AI is used or how the AI is able to function. And I think QPUs will be a tremendous potential. So we'll be watching IonQ for that 20% swing here, potential 40% swing over on IonX. We actually just entered a position early in our daily live trading session at market open on Friday, right here at around, well, let me see, what was our purchase price? 61. It's currently on IonX, it's at just a little bit above that. So we'll be in a trade there as well this week. But how we manage that, we'll have to see how it does at market open due to some of the news that came out this last week. When it comes to number 3 or number 2, is that number 2 or number 1? Number 1 is going to be Black Sky. So Black Sky is a company that is in space tech, but they have a very small market cap, so we get even smaller here. The thing that's interesting about this company is, and I'm going to have a bonus for you after this one, but the thing about this company, they focus specifically on the launching of their satellites. They have some launches with Rocket Lab, but they have AI tech that is able to have a third bird's eye view of all that is happening in the seaports, all that is happening in the could be in the ocean, but could be in tactical advantages for potentially warfare, could be the airports, the shipping, the even down to possibly what people are doing, the humans and how they move, cars, things like that. And they have very high definition satellites. And I think one of the things that gives them an advantage, while they get more contracts and they're building out a tremendous amount of satellites that they're sending up there with Rocket Lab, is the potential for their AI to continue to develop more contracts for them. And they have the revenue to start to show that growth is kicking in. So when we look at BKSY, BKSY, and we look at their financials, where it's starting to get interesting is their annual revenue growth. They're small, but they're growing by significant amounts of revenue. And while they start to build revenue and their net income is actually going down year over year, that's when we start to see potential for them to become a top AI player from the bird's eye view. Now, there's Starlink satellites. You have the photo or the actual cellular or the internet, but they don't necessarily focus on the AI surveillance. And I think surveillance or AI companies that are looking for predictive analytics on what's happening on Earth, it's going to be a huge unique selling point for the company. Even though they're a space company and they focus on space tech, I think the AI piece is huge. Now I'm going to bring in what is the chart for Black Sky, BKSY. Now we actually were trading this last week. We traded this swing from left to right from this $10 range up into this $12.50, and we saw it break out. And now we're starting to look at this direction where it's had this downtrend since IPO, but we're looking now at a potential swing for a continuation into these levels. Up into this range, about a $17 range would be about a 35% increase. So why are we watching that swing? Well, when it comes to the levels they're at now, it's possible they get rejected. As I mentioned, there's a lot of volatility, and that's why I left them here. But there's a lot of volatility, and you could see rejection here. And now we're starting to see if they break out, they continue up. This is the next target. So we're looking for that 20 to 30% swing. And if they get rejected, there's the point at which they could potentially get rejected is that previous resistance there. Start to see it there at about $13.15. So the chart looks a little weird there. Let me fix it up. But essentially we had these levels where it was kind of breaking out, and now we're saying previous resistance at around $13, and we're looking for a swing up into $17. And I like their technology. I think they're an undervalued company at just $400 million. And I think with their increased revenues that we're seeing, as well as them pulling in the hundreds of millions of dollars now, we start to get into a very clear reasoning why their market cap shouldn't be 400 million. Should be more up into the range of $1 billion to $2 billion. I think that would make sense for how much money they're bringing in as well. So outside of Black Sky, there's one bonus I wanted to include, and this bonus is going to be BigBear.ai. And BigBear.ai is probably my number one, and it's also the one we cover the most on the channel. BigBear.ai has some focus on building out infrastructure for the port of entries, as well as the what is Veriscan technology. So previously they were at around $1 a share when we started covering them, and they surged to $10 a share by about January. And then after January they sold down, and now they're at around $4 a share here in June. And they have this technology that's expanding. You might have seen it. They've scanned my face at the airport. They have a lot of new partnerships. If we look at their news that they've had recently, they have this biometric technology that has been getting put into all these new airports. You got Chicago, you got Denver, you got John F. Kennedy, you got Los Angeles, you got Montreal Trudeau, you got Port of Seattle. There's a lot of growth there. And outside of the new Veriscan technology, they also have a ton of contracts. You got Department of Defense, you got contracts with the Pentagon. They have a $160 million Army contract, and they also have a partnership there with Palantir. So when it comes to the industries they're in AI and defense and intelligence, and they definitely are seeing a growth in their amount of contracts since they joined IDIQ and their on-demand service for the government. Outside of that, their CEO also is someone that recently was part of acting secretary of U.S. Department of Homeland Security. So to see them get more of those various scans and processing all the data with AI and being able to identify threats in and out of borders or at the airports or what have you, I think that's a huge market, and they're taking it on pretty quickly. So from a perspective, they got a lot of holdings of large institutions. As of recently, there's a lot of increased positions, which to me is a good indication of focus. And then while we're number one there on Google, thank you guys for the support on the stock as well. When we look at the market cap, they're at 1 billion. And when we look at the growth of their financials, they mentioned their last quarter that they were expecting more revenue, but that they hadn't hit their bank accounts, and that they're expecting it to show up in the next quarter. The revenues have been increasing. We've seen it up to about 40 million. They're up 5% year over year. Operating expense or net income there is up 51%. Cash balance sheets is doing well with total assets to basically near an all-time high, while liabilities have been up there. In the last quarter, they reduced their debt significantly, almost by half, as their assets increased. So the financials, really not too bad. The cash flows looking better, so they got more net in cash. And there's a lot of hype articles. It's also a lower market cap, so there is a lot of volatility. But the swing we're looking here, the swing that I'm looking to potentially trade this next week with BigBear.ai is from this $3.97 price point up into this $5.30 price point. You can see it's been consolidating really since April pretty consistently. Recently sold down, kind of bounced at this 200-day moving average. We want to see it hold this overall trend, kind of break up into this $4 range again, $4.15 range, and that would be good indication for a swing trade. To disclose, every stock that I've covered in this video, I have long-term positions on, but we also trade the short-term, and BBAI is one. I have $2.80 average back here when we started covering it, and I'm looking for short-term trades as we trade it quite often, as it has a pretty consistent pattern most times when it's in trend. So we're going to look for this 10 to 30% swing potential on BBAI in the near term, but we'll also have to see how the market reacts with the news on this coming Monday. I'm expecting possibly some dips, maybe even a little market manipulation. So we got to watch closely, but nevertheless, we'll be there at market open. So again, if you guys want to join us, the second link in the description is for Stockmates. Those are our top 5 AI stocks, but if you're looking to get targets every week for the top stocks, we have Stockmate here where we release the earnings and the targets for all the stocks. Here's an example. We got the earnings calendar for the companies, their catalysts, and what we're looking for in the next week, and exactly when those companies are reporting earnings. So maybe pre-market or after hours is one. And then you got Monday through Friday, which companies are reporting and which AI companies, quantum companies, or space tech companies are we watching. You can also see we got some members in there that are heating up. We're looking for some more analysis. And we also have some growth here happening in the book stage. So if you ever want books, you also get a book along with the daily live sessions and everything else. You get the community here, and you can see, for example, ordinary versus profitable, and how do you actually learn? How do you find the time, but also what is the best strategy to actually learn? And how do you set a trading plan? All those things, and along with one of the most important things that most beginning investors and traders struggle with, which is emotional IQ. So I kind of talk about it in the book. You can go grab it when you're in Stockmates, and you also get a free t-shirt upon joining. I'll send to you anywhere in the world for a Stockmate t-shirt. So again, there's a huge sale there. I would encourage you to check it out. It's the second link below. And if you ever want to catch our virtual class that we just did on trading in the stock market in these markets, then you can check the first link below for the full class we did earlier this week. Thanks so much for watching. I appreciate you all. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you guys in the next video. Take care.